You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent, your host. As always, it's been quite a few months since we've had Chanelle Boylen, our senior property manager, in the studio with a rental market update. And I thought Easter, time for people to take stock with their portfolios, time for people to have a look at the budgets. A lot of us, including myself, look at the monthly budget around this time. It's the first time I've got a second to think about when money is coming in and out. And that rental portfolio, where a lot of transactions are managed by our property managers every day, is one that I look at around Easter and a couple of other times in the year. So I thought, Chanelle, I'm going to drag you into the studio and ask you a few questions about what's happening in the market and the dynamics at home opens and just general day-to-day property management life. How's it going, mate?
Yeah, good, thanks, Trent. And you?
I'm very good. I assume you've been in and out of home opens and management sign-ups as you usually are. So thank you for your time. First thing I thought it would be interesting to note is just where are we at with our vacancy rate? And how is that comparing to where the market's been over the last couple of years?
It's interesting, Trent. As of April, our vacancy rate is currently sitting at 2%, which has increased and is the highest we've seen since June 2020.
Yeah, that number I think has been sitting either in the ones or the point somethings since COVID, really, hasn't it? We haven't seen a 2 in front of vacancy rates for, as you said, 5 years.
5 years, that's right.
Are you noticing any difference in the dynamics? It's all good to say, yeah, it's 2%, but does this market feel like there's more availability or less people at home opens than there was a year ago?
We're still seeing the same amount of people coming through home opens, but there are a few more properties on the market at the moment.
Now, I look at the numbers, and REWA, obviously, for everyone listening, reports on this every week. I think we've got about 2,200 properties available on the market right now for lease.
We've got 2,263 properties, which is 10% higher than what we had the same time last year.
See, that's still not a lot of properties, Chanelle. I remember 6 years ago, we had 11,000 properties on the market. So we've gone from 2,000 properties to 2,200. The amount of people looking for a property is about the same, you're saying, at a home open every week. But our vacancy rate has tipped up. Now, the vacancy rate is the amount of properties in Perth that are rental properties versus the amount of properties available. And it made me wonder, is it possible that actually a lot of properties that were rentals are now being converted into owner-occupiers? So if you reduce the amount of rental properties on the market, and you have the same amount of rental properties available for rent this week, of course the vacancy rate's going to increase. Does that make sense?
It does, yeah.
Are you seeing that on the whiteboard with a lot of properties that are starting to move from, hey, I'm a landlord, I'm looking to move back into my property?
We have seen an increase in tenants purchasing their own home. They've decided that obviously the rental amount is too high and they might as well enter the property market themselves.
So people moving out from being tenants, but probably not a lot of people that are transforming their rental into an owner-occupier right now.
No, not right now.
What about managements where we've lost the management? What percentage of those is because people are selling that property?
We have seen a larger increase in owners actually selling their property while the market is high.
Yeah, and that's interesting. I wonder if that's where it's coming from in seeing the higher vacancy rate, because we're certainly not seeing a huge increase in time on market for rentals. We're not seeing the price of rentals dropping, which will be indicative of more supply. And we've also just seen that it's 2,200 properties rather than 2,000, which again, not a huge increase compared to 11,000 a few years ago. So maybe it's a case of a lot of these investment properties are going to market. Landlords either tired or happy with their return, one of the two, and they're getting snapped up by owner-occupiers. So maybe that is one of those factors where we are losing investment properties on the market right now, which is an interesting point. You mentioned it's getting expensive for tenants. We know that the median weekly rent was $350 before COVID, which is quite amazing when you think about that cost of living back then. Quite cheap when you compare it to now.
Very cheap.
What's the median rent now?
You're looking at about $650 a week for a 3-bedroom and about $725 for a 4-bedroom family home.
So we're closing in on doubling the
almost
rent.
Double, that's right.
And when you think about people's decisions there, if they've got some savings, and then you tie that in with the first home buyer schemes from the federal government for 5% deposits without LMI, starts to give people a reason to move out of the rental market if they can afford it, if they can afford a loan, if they've got the deposit, and move into buying their own home. How's that been in your experience with regards to churn of our tenants? Are people either breaking lease or finishing their lease to go and move into their own home?
Yes, they are. So we are seeing a little bit more supply on our whiteboard, and that obviously is for that reason that tenants are moving out. So therefore, there's another opportunity for a renter to come through.
Interesting. Okay, so break leases are happening.
They are. A lot more frequently than they used to.
So what is a break lease? Explain the implications to the tenant. What are their responsibilities? What have they just done?
So the tenant will be on a fixed term lease agreement, which has an end date.
Maybe it's 6 months from now.
Correct. And then they are wanting to break lease at their own cost. So they're wanting to terminate that contract with the owner prior to the tenancy end date.
And do they have to keep paying rent for a period of time? Like, they're obviously in a contract here.
They are. So they are entitled to pay rent up until a new tenant is found. Also for advertising costs and final bond inspection costs.
Couldn't that just extend out for weeks and weeks? Does the landlord not have to go and find a new tenant as soon as possible? Surely that's part of the legislation.
It is. The owner is obligated to mitigate the tenant's loss, and therefore they have to advertise pretty quickly and market for a new tenant. So there are obligations on the owner's side as well.
It sounds like it could be a pretty expensive situation though, but I guess if a tenant's finally got that opportunity, found the dream home they've been waiting on, but they've obviously had the security of being in a rental, it's maybe part and parcel with a lot of these transitions. It sounds like it could be a bit messy, but is it?
People are willing to pay to get into that dream home of theirs that they've been saving up for.
And then how quickly are we leasing those properties?
Most properties we're seeing are leasing after 1 or 2 home opens.
See, that doesn't sound like a market that is vastly increased in supply to me.
No, there's just probably more of a frequency of turnover of properties.
Very interesting. Going back to the cost side, again, we're closing in on doubling our rental cost, and wages obviously haven't doubled in the last 5 years. Are we seeing many people in arrears? How's that looking in terms of people just genuinely putting their hand up and going, I'm sorry, man, I can't afford this. I'm going to have to tap out. You've just given us a rent increase. I'm going to have to leave. What's that dynamic looking like right now in terms of the sensitivities between where the market rate is for that rental versus what people can afford?
We are seeing that tenants are able to afford what they have at this point in time. Due to obviously new legislation, we can only increase the rent once every 12 months. And we are seeing that most tenants are really good with their rent arrears. And if they are falling behind, they are notifying us fairly quickly. And we've only had the occasional case where we've had to set up a payment plan and things like that.
That's pretty interesting. I would have thought we'd see a bit more pressure, to be honest, because it seems like we are hitting a bit of an affordability cap. We've probably seen this for the last 12 months. We've spoken about this before on the rental side, where even though values are still increasing, rents aren't increasing as quickly, and therefore yields are dropping, which means less investors coming into the market, less supply of rentals. Bells are ringing here in terms of how the vacancy rate starts to be calculated. I would have thought, Chanelle, that we'd be seeing a bit more delinquency, a little bit more stress, but it's nice to see, at least luckily maybe within our own rent roll, that isn't yet an issue. Is it possible maybe that we're seeing that being mitigated by more people paying the rent? How does the amount of individuals on an application compare now to what it was a couple of years ago? Is there share house happening? There
is a lot more share house situations happening. So we're seeing about 4 maybe on an application on average, rather than maybe 2, maybe a single occupant.
How does that go with regards to maintenance? And how does that interface with our landlords? Now, if I was going to put my landlord hat on for a second, I would like to have the least amount of people in my house, so there will be the least amount of maintenance.
That's right, and least wear and tear on the property as well.
Yeah, exactly. So is that causing issues for us applicants with multiple people moving in? Is that something that landlords are looking at favourably to say, hey, at least they can pay the rent? Or are we getting some pushback where they're saying, I don't want 5 or 4 sets of shoes walking through the house every single day? What's the dynamic?
It does depend on the type of property as well, and obviously the age of the property. But regular maintenance is important if you are a landlord. We are seeing the landlords more inclined to accept those applications with multiple occupants. That way the affordability is there in terms of the rental price.
Okay, so people are focusing on the revenue rather than the possible costs in the future.
That's right.
That's interesting, and I think that would probably be a piece of advice I'd be giving to landlords out there. Is obviously you want to protect your downside financially from a revenue point of view, but we have seen a couple of tenants over the years where there are definitely larger maintenance bills when it comes to carpets, walls, those sort of things, from not only just multiple adults in the house, but families with large numbers of kids. And you think, geez, this house looked so beautiful a couple of years ago, and there's going to be a bit of money to be spent on this maintenance. And there's no amount of rental inspections that can mitigate this as well. So I guess a lot of it always comes down to selecting the best tenants and balancing the revenue versus those maintenance costs of being a landlord.
Yeah, that's right. As an example, currently I'm renting a 2x1 villa in Bassendean, and we're seeing a lot of families of 4 applying for that property, and it's probably not an ideal property to have a family in there for that reason.
Do you think that's because the price of renting a property in Bassendean for a family home, a 3x2 or 4x2, is just out of reach for a lot of these families, and that's why they're just pushing down to the lowest common denominator of what they can reach, but in the same school zone maybe?
Definitely. This property is $600 a week, so that's very low for the suburb of Bassendean, and I think they're just trying to get into the good school zones and perhaps be saving for their own property. And
so that's a perfect example where clearly you go, look, double income family should be able to pay that rent of $600. They may be looking to stay for quite a while because they obviously got kids in the area. Tick. But then thinking, geez, it's a 2x1. That puts a lot of pressure on that house in terms of maintenance risk.
It does, yeah, definitely.
How do we balance that off with a different applicant? I guess what we're really looking for is a single or a young couple who don't look like they're having parties, whose income clearly can pay the rent. As a landlord, you're looking for the least amount of occupants who can demonstrate an acceptable amount of income, aren't you?
That's right. The owner is looking for a single occupant, preferably in the over 55 range, given that it is a smaller complex with generally the elderly in the complex. So yeah, that's more of an ideal tenant of what they're looking for, which may take a little bit longer to rent, but they're thinking of those types of things such as maintenance.
I think that is symptomatic of what we're seeing with some data showing that there is a mismatch between the properties supplied to the market right now, being a lot of 4x2s and 3x2s. And actually what we're seeing is preference on realestate.com for searches of 3x2s and 2x1s. And you go, why is that? And I think some of it might be the makeup of society in terms of just having smaller families. But I also think a lot of it is people just pegging down to price points and just going, well, there's no way I'm going to afford a 4x2 even though I'd love one. I think it's symptomatic of the times with regards to median rents. How is that acceleration of rental prices been going within our office, Chanelle, over the last 6 to 12 months? We obviously experienced a few years there where rents were going up $50, $100 every 6 months. What's the relationship like right now? What are our landlords looking to achieve on our rent reviews in the last couple of months?
We do expect rental prices to continue to increase. However, it'll be at a slower rate than what we saw in 2024.
So what are we thinking? 10, 20, $30? Are we seeing $50 or $100 being asked of our landlords, or is it
not anymore? They're more on the lower range than what we have seen in previous times, dependent on the property, of course, and given that we can only do the rents every 12 months.
Yeah, I guess so. When you got that one chance, you want to push it as far as you can as a landlord, don't you? And then when we think about advertising it for a higher price than it was last year, how often do we get into a situation where a landlord says, look, we were at $750 last year, I'd like to be at $780 this year. We do what's asked of us, advertise it for $780. We don't get many good applications through, and had that conversation where it's like, look, maybe we need to get back down to maybe $760. Is that happening a lot versus last year, or we're still getting what the landlords are asking for in most cases?
We are seeing that as a difficult market to price a property in at the moment, and sometimes we will market the property at the higher end. And if we're not generating that inquiry, then we will reduce the price from there within sort of a 24 to 48 hour period.
Is that happening a lot, or is it probably less often than a success?
It's probably happening 50% of the time.
Yeah, interesting. And what was that dynamic like a year ago?
I think a year ago it was a lot easier to price properties than what we're seeing now.
So the market was just paying what they had to?
Yes, that's right.
Yeah, and I think what we're seeing now is just that inflection point of people starting to have a little bit more choice, not a lot more, and a little bit less FOMO, settling in their properties, staying in their existing rental properties, and finding those other solutions of bringing in a partner, being multiple occupancy to stay in the same location, because it has been chaos as a tenant for the last few years. And I know a lot of tenants that have just been moved from pillar to post, one rental to the next, just trying to keep up with rental prices. So a little bit more stability in that price point. It's probably a good thing for everyone. And that's probably some advice I think both of us would give to any landlords listening today, is be fair and reasonable about what price you're looking to get. We're not in a FOMO market anymore. We're in a value seeking market where good amenity will get snapped up, and those lower quality properties not going to see massive rises anymore. It's really about consolidating good tenants, and if you've got a good tenant, don't push them, keep them.
That's right. And we are seeing a lot of our long-term tenants continue to renew.
Look, that's important. At the end of the day, long-term tenants, for the most part, are tenants that look after their properties.
That's
they
right.
look after them like a home, and therefore maintenance issues aren't as bad. And one thing that we're seeing that's getting very expensive for landlords is paying contractors, landscapers, plumbers, electricians. They've always been expensive, but it feels like the last couple of years, Chanelle, those invoices coming through are getting more and more expensive.
That's right. We do have trusted trades that we work with quite closely, and they often pass on a discounted rate to our clients, but we are seeing costs definitely increase in that area.
I think every trade, obviously, and just like building a new home. So any chance we can have to mitigate, again, that maintenance cost. Long-term tenants, I'd rather be keeping someone in at $750 that's going to be looking after the property than trying to make an extra $20 a week, $1,000 a year out of them, and suddenly the walls have to be repainted, the garden has to be ripped up because the new tenant's just not looking after the property.
That's right. It's definitely better to keep your long-term tenants, especially when you are considering those rent reviews, and we are seeing that most of our long-term tenants look after it, like you say, as it is their own home.
Chanelle, I've noticed recently a few of the new clients we're bringing on, the new properties we're bringing on, from landlords who haven't been happy with the service that their property managers have been providing to them. What's happening there? It feels like there are currently more dissatisfied landlords out in the market than there have been. Is it just general maintenance again? Is it not getting the price we wanted for our rental? What's the story, and why are we winning so much work at the moment?
Most of the time when we have a new client come to us and they're unsatisfied with their existing agency, it's generally because of communication is a big thing, and we try to pride ourselves on communication because we do understand that can sometimes lack in the industry, and also staff turnover is a big thing as well that we're often getting reports on when people are looking to switch.
The communication side, I think, is probably the basic, right? At the end of the day, we're renting a property, it's existing, it's not going anywhere. The rent should be coming in. Those are the basics. I guess the communication on rental inspection reports, rent renewals, those sort of things, making sure we're on time.
That's right. Just keeping up to date with where the tenancy is at, especially if there is a turnover of a tenant. The owners are obviously expecting updates on leasing and those types of things. Also, routine inspections, if there is maintenance to be done after routine inspection, following up on that, not just sending the report through to the owner and then forgetting that there's maintenance to be done and actioned.
What about management fees? Where does the market seem to be sitting right now, Chanelle? What are the cheapest and most expensive management fees you're seeing coming at us from prospective landlords?
Usually I'm seeing management fees anywhere between, on the lower end, sort of 6% plus GST, and then on the higher end, 9.35%.
Okay, so somewhere in that mid to high single digits number is where most companies are in Perth right now.
That's right, yeah.
Are you seeing a lot of prospective landlords asking for all-inclusive packages, or has that seemed to have gone away over the last couple of years? Because I know it was all the rage early COVID days.
It was, and we seem to not really see that as often as we used to.
That's not surprising. I can't imagine many firms who are doing all-inclusive fees are actually incentivized to go out and do the right job. It seems like a race to the bottom, to be honest. So it's good to see starting to leave the industry. People paying for a service and knowing what they're paying for, I think, is the best way to go about it. Chanelle, thank you very much for coming in on Easter Monday. I really appreciate your time. I hope the weekend has been enjoyable and relaxing, not too many maintenance issues, and enjoy the short week with Anzac Day coming up.
Will do. Thanks for having me.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!